Bitcoin is down 70%. The crypto market cap has fallen below $1 trillion. One of the biggest exchange in the crypto industry has filed for bankruptcy and crypto is dead. So these are the headlines that you are seeing in the news right now, and these are all true except the crypto is dead part. And why is that? We will talk about that in today's video. Why has the market price fallen? Will it rise again? When will it rise again? Or is this the end of the crypto? Welcome everyone to the Crypto Cult channel. Here we talk about everything related to crypto, its tech, how to use it, how to get airdrops, everything you need to become a crypto pro. So let's talk about why the crypto market has fallen, will it rise again, and what are the chances. So in November 2021, BTC hit $69,000, its all-time high, and from that price it has fallen roughly 70% to below $16,000, a massive drop from the all-time highs, and it has shocked the crypto industry. Investors have lost billions and there is no clear sign of an upside move or when it will come. So is this the end of the crypto market, and should you move your money to a better asset? So let us analyze the situation with some hard facts and let's see what really caused this massive correction. Now some might say that the big market players like Luna crashing down or FTX filing for bankruptcy are the reasons for the price going down, but there is more to the price. So the world economy right now works on a system that heavily relies on debt, and to print fiat money you need to take debt. That's how the fiat money system works. People will take debt, new money will start flowing into the market, and prior to 2021 debt was cheap. Taking loan was very cheap in the US as interest rates were very low, and if the interest rate for taking the loans are very low, if you put your money in an FD, the interest rate you will get will also be low. So people had no incentive to stay in cash and they started investing their money, because if they invest their money then there is a good chance that they will get a better return than 1 to 2% that they were getting on keeping their money in cash in a bank. So people started investing in stock market, in companies and in crypto, and people started leveraging the low debt. You know, if you have 1 to 2% debt, then if you invest in something and it goes up even 5%, you get 4% of free money. This system starts a cycle in which a lot of big people that had a lot of assets to collateralize started taking billions of dollars in debt and started investing in emerging startups, emerging companies and emerging assets. So if there is a lot of money coming in, everybody wants some money, right? So everybody started opening random startups. There was a startup for squeezing juice called Juicero. There are still startups like Uber that barely make any profit, and such type of companies started popping up that did not have a clear business plan of how to make a profit, but just they were acquiring users, burning the VC money, and this created a very unstable economy. And this unstable economy was set to crash in 2020 when the COVID hit, because COVID affected a lot of these business models that depended on customers coming in physically, and everybody thought now the economy will crash. That is depicted by the March crash in March 2020 when we saw bloodshed in the markets. But then the US government stepped in. They started offering stimulus to people to save their economy. Stimulus is basically they will give you a free check of money, $1,000 to $2,000, and you can spend it as you like. So this injection of money into the economy coupled with very cheap debt started a flow of money into the economy that was very fast, and that resulted in everybody having a lot of surplus cash, and there is no incentive to being in cash. Everybody started investing in the stock markets. That's why we saw one of the biggest bull markets in year 2021 that carried Bitcoin from $10,000 to $69,000, and that also carried the US markets, Indian markets. Every market was up because people had no incentive to not invest. But it was a house of cards. It was not made on a strong foundation. Everybody knew that these companies are not sustainable, and eventually the inflation caught up. Inflation basically resulted in rise of prices. Everything was getting more expensive by the day, and the inflation finally caught up with the market, and Fed had to step in again. Now there is a lot of money flowing into the market. How do you control the money? So let's get back to the point on how the money is made. Money is made by taking debt. Now everybody is taking debt and a lot of money is flowing into the market. So to stop the flow of money, you just increase the interest rate on debt, and that's how you lower the amount of money flowing into the market. If done for a decent period of time, then eventually the inflation will come down. And Fed had their plan. They started doing that, and we see that interest rate is rising almost every month. We saw it go up by 50 BPS, 75 BPS, 100 BPS, and finally we are seeing the inflation calming down. But when quantitative tightening, that is tightening the flow of money into the market, started, everybody started panicking because everybody was leveraged, and the rising interest rate means that they have to pay a lot of money to the people they have taken debt from, to the banks. So people started selling their stocks, their investments, started cashing out to get out of debt so they don't have to pay a large sum of interest. Plus raising money and getting more investors became very tough because nobody was willing to take debt right now as the interest rate were high. And eventually eventually the market saw the effect, everything started coming down. S&P 500 came down 10 to 20%. It is still down. A lot of companies lost 70 to 80% of their market cap. We saw big players like Netflix, Facebook suffering a lot from this. And since stocks, which are considered relatively safe investment, was seeing 70 to 80% drawdown, we eventually saw it happening to risky assets like Bitcoin. If the flow of money is low in the market, people do not have that much money, and if you do not have that much money, you are not investing that much, and that's why people started withdrawing money from their investments, and prices of crypto also started coming down. And when the price of crypto started coming down, we started seeing that crypto is an unregulated space, so there is a lot of bad debt in crypto. A lot of people are leveraged to the neck, and the price of your asset that you have given as collateral starts going down, then a margin call occurs and your collateral is gone. So we saw this happening with a lot of companies. Celsius filed for bankruptcy. When Luna crashed, which was considered a good asset at that time and was in the balance sheet of a lot of companies, we saw a lot of companies feel the effect. Then FTX went bankrupt, and then a lot of companies that depended on FTX started going bankrupt. So this created a chain reaction that pushed the price of Bitcoin in a massive correction. So this was the reason why the crypto market fell, because the interest rates are still high. People do not have money. The flow of money is still being tightened. The quantitative tightening is still going on. So with this information, let's answer the question, is crypto dead? The answer is no, the crypto is not dead. The world economy is going through a recession right now. We are seeing prices of every asset going down, and the riskier the asset, the more it falls. We need to look at the fundamentals of the crypto industry. How is the blockchain adoption going on? So first of all, let's look at CBDC. A lot of countries are launching their own CBDC, and for this blockchain, they obviously need the tech. After this, we also saw massive adoption of blockchain in things like NFTs, in things like gaming industry, in DeFi, and even the big tech players like Instagram, Twitter, Reddit, everybody allowing NFT profile pictures. Ethereum proving that crypto bros are not just degens, because they completed one of the biggest technological wonder, the Ethereum merge. We are also seeing things like El Salvador adopting Bitcoin as their legal tender, countries like Brazil coming up with proper regulations for crypto. So all of this is going to push the adoption of crypto. We are not seeing this significant slowdown in the adoption of crypto, and a lot of people are more knowledgeable and are organically coming into the industry. So fundamentally, crypto is still strong. We are still seeing strong projects coming up. Just the prices of crypto are down. If you look around, prices of everything is down. So I don't think crypto is dead, and hopefully you agree with my reasoning. If you don't, please comment below and let me know what is your reasoning, and let's have a good discussion. So let's not focus on market cycles that much. Let's focus on adopting this technology, getting into it as an early adopter, because the risk to reward is very good for early adopters, and you don't even need money to get into crypto. You can be a developer, you can be a marketing guy, you can even claim airdrop. So if you want to become a crypto pro, make sure to subscribe to Crypto Cult, and let's go to the moon.